Somebody who looks at global markets and looks at India very closely as well. Jonathan Shizel of IIFL Asset Management joins us right now on the show. Jonathan, good having you. Thanks so much for joining in. Does it seem that while the markets are shrugging off any kind of risk-off mode in this whole past month, despite the coronavirus fears, might finally enter into a risk-off mode, or is it difficult to kind of call that?
Obviously, markets are gyrating with every new piece of news. Hopes come up, markets do well. Clearly, markets are hoping for more central bank and government action globally. But yeah, I think, to me, it was markets seem very complacent. This coronavirus issue, regardless of, the terrible impact it's having in China, but obviously the impact to supply chains and the global economy. So I think markets had been obviously more on the bullish side and hoping for more government action as opposed to the consequences of the slowdown in China.
Do you anticipate money getting pulled out of the equity markets due to this, and not just Chinese equity markets, but the ripple effect on other emerging markets as well?
Yeah, I mean, equities are, before this happened, I was reasonably optimistic for this year. I still am reasonably optimistic. I think the issue is and particularly for emerging markets, actually, as a group, I think this is clearly probably paused that optimism for the time being until we understand the consequences of this virus and the effect on the global economy. I think equities in the equity space still looked okay. Yes, we've had an extremely long cycle, but I think I was hoping that growth would start pushing out from the US into the emerging space. And I think that a lot of the excesses have been driven out from the emerging market complex. And yeah, I think this is clearly when we sort of understand the impact of the coronavirus, then probably equities do look quite interesting again if they come off a little bit more.
And not just that, I mean, Jonathan, I was reading a report and it suggested that if this continues for more than a quarter and if it doesn't end by this quarter, then the implications bearing down on companies' earnings are also going to have a more prolonged effect. And then for them to come back into form and kickstart, exports to China or for that matter, where, a lot of bulk of the activity for companies which have auto exposure in China could take much longer.
Absolutely. I think, this is clearly going to cause companies not only short-term pain from an earnings perspective, but I think all multinational companies or companies with global supply chains are going to have to think long and hard about over-reliance on, for example, China. There has been some movement into countries like India of some supply chains, but I think this perhaps might sort of push that process along a bit more, where companies just simply cannot carry the risk of being too exposed to one country, even if that country has incredible cost benefits.
In light of that, do you see India as being at least the stopgap beneficiary to this particular crisis that we're having from the manufacturing side? Because up until now, manufacturing was not particularly a strong foothold of India. But lots of measures have been taken by the government to make sure that overseas manufacturing makes its hub in India, and this could be an added opportunity.
I think undoubtedly, I think that's an opportunity we've been looking for at least a year and a bit. I think obviously India does have some hurdles that need to be overcome: land acquisition, labor issues, and I know the government is trying to slowly address some of those issues. But yes, in certain sectors, India can play a significant role. But I don't think India is going to become like an export powerhouse like the likes of China anytime soon. I just don't think there's enough room in the global economy. And I think India's manufacturing is probably primarily focused on domestic market needs as opposed to suddenly becoming a global powerhouse.
Jonathan, well, it's a long time to go to be called an export hub for India, but I'm shifting focus back to Indian equities then. What's the outlook there? Are they looking attractive at current levels, especially after the union budget? What's been the response of the FI community you're interacting with?
Yeah, I think, most of the foreign investors, the budget was a bit of a non-event, if I'm honest. Yes, I think people were happy that from a fiscal perspective, government didn't go too over the top and risk that whole, the fiscal side. But I think clearly the economy yes, it's probably bottoming out, but it has been a very vicious slowdown. And I think market had been anticipating a bit more clear-cut cuts in certain segments, cuts to income taxes. And there is quite a complicated, I think, budget with regards to income taxes and potential helping of the lower income groups. So I think net, the Indian market isn't too far off its highs. Yes, we've had a bit of profit over the last couple of days. Earnings season isn't wonderful. It isn't terrible. It seems to be, roughly on track. But the market looks a little bit expensive here, probably, and I think there is some potential for some profit taking. I think, obviously markets are hoping for further action from RBI, from government. Globally, obviously, equities have done well, hoping for that government and central bank action. But I think, India, for where we are, for the valuations and where we are in the cycle, in the short term, it's looking a little bit pricey. But obviously, looking forward, we're quite, confident of this recovery coming through in the latter half of this year, and therefore, I guess that's what the market's trying to price in.
Jonathan, Indian markets per se, they've been expensive, I guess, for the longest time now. And this is something we've been talking whether at current levels it's offering any sort of value. If the money is still flowing in, we've seen some bit of flows coming, back from the FI community. Which are those sectors that you're identifying which still offer some bit of reward to risk ratio in terms of that from the current levels? What is looking attractive, basically, in terms of sectors?
Yeah, it's interesting on the sector front. We still, as a house, very very bullish on the financial services sector. That hasn't really changed. Yes, there's some pockets of value there. Other parts of that sector clearly are sort of classified as being fairly pricey and have been for some time, as you mentioned previously. We like that sector. We still quite like industrials as well, because we do believe that this economy will start to push up, and we've probably hit the base in the last quarter. So those two sectors are good, and I think, quite frankly, anything outside the top 5 or 6 names in the big indices, there is value there. Obviously, as we all know, the indices have been held up by a very limited number of stocks which are trading very expensive compared to their history. You start pushing out into the more domestic stocks, and you do see a lot of value out there. L&T looks very good value to us. And there's quite a few names out there that there is value, but you just have to look underneath the surface.
Jonathan, just one last question with regard to you mentioned L&T from the infra space. Anything from the consumer space, which is very, very expensive, do you still find any value there?
Yeah, I mean, that's been the classic sector, which has been incredibly expensive for a long time. We've stayed away from a lot of the staples names in particular because we just couldn't get our head around those valuations. But obviously, Hindustan Unilever delivered fairly good numbers again, and the street's rewarding that one. Look, again, in the mid-cap space, there are pockets of value, but I think as a sector, it is a sector that has been suffering for some time with this consumer slowdown. And to us, the valuations still don't provide a very compelling risk reward at the current prices.
We'll leave it at that. Thank you very much for joining us this afternoon. Appreciate your time.
Thank you.